Hi there again, it's Carol King, the founder of Custom Homebuilders Solutions, also known as CHS, a job costing and full accounting system, a boutique system for custom home builders. I'm having so much fun with all my little vintage clip art as I do all of these seminar videos, and I call this seminar Wrapping Up the Books, so that we can briefly go over the journal entries, the job closing deposit entry using that big old HUD statement, closing the job on the books, closing the books at year end, financial statements, and how there's financial budgets in CHS for budgeting your income statement accounts like sales, cost of sales, and expenses for your next year. This is not a detailed help tutorial for these features. I will point out how to find the help tutorials that are available on CHS, and in this video I'll just briefly go over the features. Well, way back there sometime, not long after I got my accounting degree, one of the first jobs I took on was with a very large rancher in Texas that had gas leases, hunting leases, various types of cattle, and they had an accountant bookkeeper that they'd had for decades that still kept their books manually in great big ledgers. My job was to get all of those books computerized, which was quite a job, but in looking back, I am so happy about having done that job because I first had to learn how to keep journal entries in great big manual ledgers. So if you can imagine, you go out and spend some money on something. To do a journal entry in those ledgers, to get your debit and credit in, you have to go find the page for cash in the big ledger book and post a minus amount or a credit there. Then maybe it was for some office supplies, so you have to go find the page for office supplies in the big ledger in the expenses area and post a positive amount there or a debit to make up your complete journal entry. Or maybe in the case of this rancher, if a new bull was purchased, you would have to go increase an inventory account for cattle with a positive number or a debit and then post a minus amount or a credit in either cash if you paid cash or in some loans payable account if you borrowed the money for the bull. But what I'm so happy about is that I learned without using a computer the concept behind all of the ins and outs of those action and reaction journal entries. Almost all accounting software is actually based on this basic debit and credit type of activity. And I learned watching that bookkeeper use her adding machine like you wouldn't believe. And in fact, she had one of those really old ones where you pull a great big lever. But anyway, I learned about having lots of calculator tapes to total up every page in the ledgers and then add those totals up to make sure they total to zero for the entire balanced set of books. In order to convert all of this to a computer, I had to take over doing the manual set of books as I worked on the conversion. But what I'd like to point out again is that in any accounting software, including CHS, it's really all about those ledgers. But by using a computer program, you don't have to go to different pages in a ledger to post things and then total up all those pages separately and then total all those account totals together in various ways to come up with your year-end or month-end closing entries and to produce financial statements. So let's start with taking a look at how you can enter your own journal entries in CHS, the debit and the credit, even though CHS is taking care of most of all of those journal entry actions for you automatically. So here we are again in CHS on the home main menu, and we're about to talk about journal entries, or adjusting journal entries as a lot of people refer to them, and those are usually manual journal entries that you're making. There are some things that accountants know that they need to post and that they need to do it manually. So I'm going to click adjusting journal entries here, and we're going to see a list of adjusting journal entries, and adjusting journal entries are done in batches, and the batch should total to zero because they all have some debits and some credits. If I look at a JE batch report, you're going to see they were crediting accumulated depreciation, then debiting depreciation expense, and again crediting accumulated depreciation and debiting, and they were posting depreciation for their rental properties, which is what I'll show you real quickly here in just a second. But I'd like to show you that there's help here for adjusting journal entries, and it says journal entries playlist, and you'll see that there's several videos adjusting, posting monies received, posting a job closing. I'd like you to know that there's screens where CHS will be helping you with those types of things, a job closing, a closing at year end, percentage of completion. There are windows that will help you make these entries by gathering some numbers for you to make the entries, and we'll see some of that in this video. But if you're just going to make a straight out journal entry yourself, you would be just coming here and creating one. It says that all records posted to your accounting database are posted in balanced journal entry batches. They are batched by date and by document and are made up of debits and credits that total to 0. Every record in your accounting set of books is part of a journal entry batch. CHS marks each accounting record with a journal title that basically identifies where the record originated. Most journal entry batches are created automatically by CHS when posting things like bank deposits, accounts payable, accounts receivable, etc. When it is necessary to post your own journal entry batches to your books, use the Adjusting Journal Entry or AJEs window. Let's take a quick look at the help document that's available here. And you're going to see that it's telling you about the same thing that I just read to you here, but what I wanted to show you was that CHS has some different what it calls journals for posting things. And the Adjusting Journal Entries, AJE journal, is for entries that you are creating yourself. The AP is the Accounts Payable journal. And when you post a new bill to pay, CHS is taking care of putting the credit to accounts payable in the AP journal that offsets. So say you post a bill to pay for office supplies and you just select the office supplies GL. When you submit that, CHS knows to put it into accounts payable because you're going to pay it in a check run or whatever. AR is for accounts receivable records. So you go to accounts receivable, you may enter a invoice for some rental money that somebody owes you maybe. So you just select rental income when you're doing it, and when you submit it, CHS is posting the other side of the entry to accounts receivable account, control account. When you go to the deposit window, you're entering some records about where you're posting this deposit to, and all of that gets posted in a deposit journal. The offset journal is kind of not as easy to understand, but it's one we set up so that when you actually go pay a check, we are taking the money out of cash behind the scenes, and then we're lowering your accounts payable when you print checks that are in accounts payable. We set up an offset journal to hold those in and out entries. And then, just like in the last video when we were showing doing payroll, all of those entries and the stuff that you're posting there is going into a payroll journal that is titled PR. The double entry method of accounting that the program uses requires that all journal entry batches have at least one credit and one debit entry to keep the books in balance. And again, when you're doing various things like this, the program takes care of creating the necessary balancing entries that will keep the journals in balance. However, on the journal entries window, the user is responsible for posting entries that keep the AJE journal in balance. I won't go into anything else here, just know that this document is here and that there's multiple tutorials about doing various things that have to do with journal entries. So notice that we don't have all that many, and again, I'm doing this in 2021, and a lot of stuff I've demoed before have been in 2016 and 17 and stuff, so just don't pay any attention to that whole thing. We can get the concept here. The way I'm going to show you what a journal entry looks like is I'm actually going to copy from another one. Let's say it's at the end of the year 2017, and we want to post the rentals depreciation journal entry. So let's add a new JE batch, and let's do it at the end of 2017. And I'm going to say I want to copy from another JE first of all, and I want to select the batch I want to copy from. Rentals depreciation 2016. What CHS is going to do now when I create the new JE batch is going to go ahead and make a new journal entry just like the previous one, but date it with this right here and give it an ID of this. So let's create the JE batch. So it's created it, but this is basically the same kind of window when you add a brand new one. You'll start your first line. In this case, the GL number 1975 is accumulated depreciation, which you're doing a credit to for this property. So the unique thing about CHS is it not only gives you lines for all the journal entry credits and debits, it gives you a place to put a job, a department, if it is a job cost, to select a cost code, this and that. But the debit then went to depreciation, rental property that is actually an income statement account. And then we did another couple of lines for the other property, which we had to do. We don't do one great big one because we're keeping track of things. We set these rental properties up as jobs so that we can make little income statements for each rental property. Now notice that all of this totals to 0. If I change one of these to make it a 6 at the end, now we show a minus 0.01. If I submit this, it's going to say the totals must equal to 0 because we need a balanced set of books. So I need to change that back to 7. As you make a journal entry, you'll start your first line, then you can use a plus line to start making additional lines until you get your whole batch in. Or you can use a copy icon so that you just copy the previous line and maybe change a couple of things. Or you can delete the line if you decide, I don't want this line, I don't need it. So let's submit this JE batch. We just wanted to get that done quickly by copying, and to let you know that you can start copying batches. Now notice that there's one 12/31/2017. And I would like to point out that if I wanted to see everything that had to do with depreciation, I know that I'm kind of using that as my code in my batch ID. I can do a search and I see rental depreciation, rental depreciation. Let's clear the search. That's basically the basics on doing a journal entry that's for something outside of any other normal features in CHS. And I think that's why it's called usually adjusting journal entries. You're adjusting the books yourself with your own journal entry. So let's go home, and I'd like to take a quick look at something. The great big ledger book, but not really. And I want to take a look at everything between these GL dates. I would not be able to do that if I had a great big manual ledger. I'd have to go pull those out, total them up by themselves, blah, blah, blah. Search for certain accounts I could do here, certain vendors, just to see record entries for, say, big buck construction that we paid, or just for certain jobs. So you have all sorts of search features before you open your ledger, which is not a great big ledger book again. And you start seeing all the accounts in the order of the GL accounts and all the entries. But what I wanted you to see is that right here under cash, where it says deposit, it's showing you the journal. But in cash, there's one record here for this amount, increasing the cash account in this amount. Makes sense that that's from the deposit journal. But if you drill down on it, so you can start studying the journal entry batches that were made when you did things. Let's go down here, direct instruction. Looks like we probably did something in AP right here, accounts payable. And we'll see the entries that we were making on the accounts payable window and the offsets to those to accounts payable trade. CHS, when you submit it, goes and posts it to accounts payable for you. You're not making all these lines, just the lines for the records that you will be paying. Which will make sense if you watched our videos. You're just doing a window and saying, I want to pay somebody for office supplies, and you do one line for that, and you submit it, and CHS will do the debit to office supplies, and then the credit on its own to your control account for accounts payable. We went over payroll in the last thing, and you can see the entire payroll journal entry that your CHS is helping you with, and drill down on it to see the whole journal entry batch that this was a part of. I didn't ask for 2017, but let's look at that 2016. It's showing up in accumulated depreciation. You can see that is in the AJE, which means to you that this was made manually by somebody. And then you can do reports of whatever you searched for, do a few more searches in here, but you're certainly not taking out a big ledger, to see what totals are in the accounts for maybe a certain time period or for certain whatever. And you can do great general ledger reports. It's called general ledger because it's referring to that great big ledger that people had in the olden days. So aren't you lucky that you don't have to open that great big ledger like in the old days and move to one page for accumulated depreciation and then to another page for depreciation expense when doing that adjusting journal entry, and then getting your adding machine out, totaling all those up for year end or at the end of a month for an income statement. I mention this because it is good to visualize that so that you actually understand what a computer program is doing behind the scenes. So let's move on. So when it comes time to go to that job closing at the title company and get your closing check, and then figure out how to post the closing deposit for that check, and then close the job on the books when you're ready, all of that can be very mind-blowing in a custom home building business. But CHS comes to the rescue and has tools for you. First of all, it has a contract balance report to figure out what is due to you at closing before you go. Second of all, we have great tutorial help videos with examples from HUD statements about how to post that confusing closing deposit, clearing out any loan payables at the time and getting the closing costs posted as job costs, etc. And then we have a window for closing the job on the books after the closing deposit is posted that shows you immediately how much there is in each balance sheet account for that job and gives you a tool to move those balances to your income statement accounts. And there is info about doing that for the completed contract accounting method or for the percentage of completion accounting method. That window for closing the job is giving you those balances and then asking you where you'd like those balances to be moved to, like sales or cost of sales, and then is basically creating a journal entry batch for you from those entries. So let's get started taking a look at some of that stuff real quickly. So let's get started talking about what you do prior to going to job closing to look at your contract balance reports, and then what you do with that deposit that you receive, that check from the title company that has to do with tying it to all the big HUD papers, and then how to close the job after you've posted the closing deposit. I think one of the most powerful tools in CHS about that is the help document for that. So I'm going to go to all help tutorials to show you something, and I'm going to type in here, because this is for all the help tutorials, I'm going to type job closing right here and press my enter key. Now you're going to see that various sections of our help have expanded and opened because it found the word job closing somewhere in the section or in the description. And you'll notice that job closings are referred to in our couple of videos about the complex builder accounting. So you could watch that to get it referred to a little bit. You'll also notice here's seminar 18 that we're working on right here. And the video I'm doing right now will be connected, so it popped up here. It's also popping up a little bit under payables because it's talking about something that was included in a job closing. Then it's talking about draw requests, posting monies received, job closing journal entry tool. Because actually when you do a contract balance report near the end, you're using that sort of for your final draw of money, and you'd see how that would relate. It also shows up under bank deposits because posting monies received at job closing needs a whole video, but a little batch of it shows up under the section for journal entries, because what you end up doing when you're posting the deposit or the job closing entry, CHS is helping you create some journal entries for all of those. The job closing entry is actually put into the AJE journal, even though you're using not the window that we just saw for adjusting journal entries, but you're using a window that's helping you post the job closing journal entry, gathering numbers for you. So what I want to do is I want to look at the help document, and I'm going to have to use the help document mostly to demonstrate this real quickly so we don't have too long of a video here. I want you to know by looking at that help there's various detailed tutorial videos about each one of the things I'm going to just jump to right here. And what it starts out saying is before using the features to prepare a job closing journal entry, the closing monies received should be posted as a deposit to your bank account first. The deposit entries will take care of clearing out any construction loans payable accounts on your books and will take care of posting any interest or closing costs to the job costs. The first pages of this help document will describe posting the job closing deposit. The final pages will describe closing the job by using the features in CHS to create a job closing entry. Now I'm going to go to the second page. So it says post the job closing proceeds deposits before posting the job closing. And right here it's referring to doing step 1, print a contract balance report for the job. And it's talking about how you go to the interim draw request window to look for those various things. I'll show you that here real quickly. But let me get this opened up just a little bigger. But you can see here contract balance due is showing here for this job to group, which we actually closed in 2014. So I'm going to use the help document to show you things because I don't have any other jobs ready to close in this demo company. So we're going to use the help document to go through things. But notice how it's showing the contract balance due. It's showing this is before we post the closing deposit. We've received $15,000 for down payments, which is an important thing. That's going to be on the HUD papers. We've done interim draws for these amounts, that kind of thing, and it's showing you that. And you're wanting to go look at this before you're talking to the title company and getting their samples of closing papers to see if you're tying. So let's jump into CHS for just 1 minute. And what I'd like to do is go to the interim draw request area that it's suggesting that you do for contract balance reports. And if I put in the group right here and select that job, and then I do contract balance button over here, it's on this window to help you do your final closing draw actually. But you'll notice that this says contract balance is 0, and I'll show you why in a minute. We've already done all the closing on that DeGroot job. But if I do the job that we've been sort of playing with in our various seminars, Loveman 2, and do the contract balance and revenues report. It's not ready to be closed yet, but you'll see how it's giving you some information. Contract type is fixed. approved change orders, adjustments to allowance, and it's showing you the revenues received. So if you were near closing and had received all these tons of revenues, you wouldn't have so much a contract balance. But you can see that these balances are here. If you're nearing closing, you would be wanting to open that contract balance report. It is also available on the Jobs dashboard. If I go to Jobs dashboard and select Smith John, and then do this Report Central button that shows all kinds of reports for the job, you'll see something right here that says Contract and then Contract Balance Report. And it's telling you, because it's cost plus jobs, you'll want to have all your estimated cost at completion, all the actual cost check marked as done, this and that when you're near the end of the job, so that your estimated cost at completion pretty well equals your actual cost since it's cost plus. This is not ready to close either, but you can see that you're getting contract balance reports, and they'll make more sense when it's near closing. So I wanted to point that out. I want to jump back to the help document and go to the next page. What it's telling you to do here is print a trial balance for the job, and you can do that under financials, select a job, do a trial balance for a job. And one reason I'm wanting you to look at the trial balance for the job, this is a tiny little example of HUD papers here. The loan payoff is $337, but your books say $327 something. You can calculate how much of that was probably interest. If the title company went and paid this amount, the difference between that and the draws that you've taken is probably interest. So I'm showing you to figure out how much is interest. Over here to tie it, some things that are not on our books yet are the title policy, recording fees, and the interest that we figured out over here. And here's the amount due to the seller. So if you're totaling all that up, it's going to tie to the contract balance report. In other words, we're only getting $16,000, which is the $34,000 showing on our contract balance report before we post things, minus these three things to equal the 16. And this is the big window that you use to post a deposit, which is totally designed for handling things like posting a closing deposit and recognizing some job costs. So let's scooch over here. Our first line we put in was the sales price, and we put it to a 2010, which is contract deposits on our liabilities. And so we put in this sales price, which actually behind the scenes posts a credit. This is to be intuitive, so everything that's a plus number is a credit behind the scenes, and a minus number is a debit. That CHS handles that for you. So then apply the down payment against that sales, clear it out of the account you're using for contract deposits. Then you apply change order money, clear it, use the deposit category change order, and clear it out of change order deposits. It's under liabilities. Then from looking at your trial balance for construction loans payable, which is what this GL is, you're clearing that amount out of your books. Now you're coming along that amount of interest that you figured out. You want to post to job costs, so you select a deposit category of job costs. It'll fill in the number you told job costs to go to. This is work in progress. And you put a minus amount that the title company is lowering from that sales price. Then they have a title policy on there if you look at the page before, and we're putting that to job costs. If we go over here, some fields open up when you select job cost deposit category to ask you for a cost code, etc., so that those will show up on job cost reports. And then there was some recording fees, which is basically the same thing. After you do all of this, you're actually coming down and hoping that your deposit total is the same as the check that you received. But if you think about it, these various things are clearing out your loans payable, clearing out various things you had in construction liability, and only leaving the amount in contract deposits that is the sales price. The next page is showing you how you can view the journal entry that got created from that. So let's go there. And let's go to the Bank Deposits menu. What I'd like to point out is help for closing a job. Use the help button, and there's all kinds of help for closing the job. But what I'd like to do is take a quick look. I'll look for deposits in 2014 here. And I see that $16,101, so that is probably very likely that deposit for the closing. Here's the whole journal entry, and like I said, the sales price ended up in here as a credit, and all these debits then to clear out loans payable, to post some job costs. Notice the cost codes going on for those job costs for loan interest, etc. And we're clearing out contract deposits, change order deposits, construction loans payable. I just want you to be assured that there's a help document about all of this. So you would use this and add a new deposit to post that deposit I was showing you. Except we have already done that, and I just showed you on the help document about that. So that's what this next page was about, is going and viewing that journal entry. So let's move on. Then it says check the contract balance, which I already did by opening the DeGroot one for you and showing the contract balance balance is now 0 after posting that closing deposit. Then you might want to go to your financial statements and do a little trial balance for that job that you just did the closing deposit on. And you'll see that all you have as a trial balance now is what's in direct construction costs and an amount in contract deposits, which is the sales price that we had. And we no longer have construction loans payable, change order deposits, because we essentially, with that deposit entry, moved it all up into contract deposits. So then a few days later, or whenever you're ready, you might have some other stuff coming in, if it's cost plus or various other things, before you're really ready to post a job closing entry. What a job closing entry does, if you're on completed contract, when the job closes and you're needing to find out the balances in the accounts on the balance sheet that you need to move on over to income statement accounts. So CHS gathers that for you and then asks you where you'd like to move these. If you're on percentage of completion, it's the same concept, except you have a couple of more accounts. And in the percentage of completion seminar, I was going over that a little bit. But this will also address it, this help document, on the last page about if you're on percentage of completion. So now let's take a look at the job closing, create job closing. So if I go home and go to the job closing JEs, under AJEs, POC, closed jobs or books, and let's look at that window. If I select a certain job, like that Loveman 2 that we've been doing, and I review a little trial balance for that, you're going to see various things here that wouldn't be here after you did the job closing deposit. But this is an ongoing job, not ready to close, but you can review the trial balance to see what's happening for any job right here on a certain date, and I just used today. If you look at our Smith John job, which is a cost plus builder fee, and do the trial balance, you can see various things going on here also, including some things on your income statement. But if I said, oh, I'm ready to close this, and I continue to the job closing window, you're only going to see accounts that are on your balance sheet, but you want all of these things here to be moved to the income statement. So this direct construction costs, you create a journal entry, it says where do you want to move it, and you probably select cost of sales, single family homes, and you click the button to create journal entry. What CHS is doing for you here is gathering the numbers on your balance sheet that you need for making that journal entry to close the job. So it gives you the numbers, which is really super great, that you don't have to go start trying to find those everywhere. And then it says, where do you want to send these? So when you do this, CHS will post a credit to direct construction costs and then a debit to that cost of sales that you selected when you do it on this other window. And you create the journal entry and you've selected your cost of sales. And then when you close it, this will zero out and it will just show a 0 here, telling you that you have done that one. Then in construction loans payable, but you probably just have a big sales price number in contract deposit. Create the journal entry and probably select sales, single family homes, for it to credit. Because what it'll do is it'll debit whatever the sales price is here, will probably be a credit amount. So it'll debit it to clear out contract deposits and then credit sales over on your income statement. Then on the journal entries window that we had open a minute ago, I looked for DeGroot. I searched for DeGroot, and I can see here the 2014 closed DeGroot right here. And I can see the batch report of closing DeGroot and everything that happened, which we can see when we open this one because of cost of sales recognized and sales recognized. We were doing percentage of completion on DeGroot, and you can see all the debits and credits here of the journal entry that occurred when that was closed. Now the reason we have some others here is because after the fact in following years we did a couple of little costs and we accidentally posted them to work in progress, which CHS will tell you this job is closed, don't do that, but we were demoing doing that. The thing is, you can go to the job closing window again if you accidentally do that and do another little job closing just to clear out those accounts, just to let you know that. Also, it's showing up here on the adjusting journal entry window because it is really posted as an adjusting journal entry. The job closing tools over there are just to help you make the adjusting closing entry. Now you need to use the job closing tools window in CHS so that CHS can recognize, using the lingo that it uses here, that the job has been closed on your books. So if you try to go change some entries or some records that were before the job closing date, it's going to give you a lot of warning about that, or even prevent you from doing that and telling you to go post some reversing amount instead of just deleting an entry that was part of the job closing entry. It's really smart about that. But if you decide you didn't want this, you didn't like it, you weren't really ready to close yet when you prepared the journal entry to close the job, you can use the X button here. It's not, again, not rocket science. It's just a journal entry. The main point here is that CHS has this super powerful tools for helping you close. So let's move on to closing your books at year end. One more thing before we get started on closing the books at year end. I'd just like to say that you could see how valuable it was that CHS gathered all the totals just for the job that we were looking at to make it easy to close that job and prepare the journal entry. I used to have to set up a whole bunch of accounts on my chart of accounts for each job in order to accomplish this, but not in CHS. You can have one account, for example, for work in progress on your chart of accounts, and CHS will take care of tracking each job within that work in progress and present its balances to you. And it will give you, as I've said before, trial balances grouped by job to see how much is in each account for the job, and little financial statements and cash flow, etc. for each and every job without having those jobs set up on your chart of accounts. So let's get on with closing the books at year end. Closing the books at year end means that you're taking all of the balances in your sales, cost of sales, and expenses account at the year end over to some equity account like retained earnings or owner equity, depending on your business structure. That means that all of the accounts on your chart of accounts that come after the equity section are cleared out to zero, and the sum of those end up in the chosen equity account. That means that a debit or credit is posted to each income statement to zero them out at year end. And those debit and credits, by the way, are done by job and by department so that we can still have financial statements for each job and department and show how much has been sent into the equity account for each job and department. So of course CHS also has some handy tools for closing your books at year end when you are ready to do that, and it helps you quickly create the entire year end closing journal entry with one click of a button. This funny clip art is here because it used to be that before accountants had accounting software way back when, they might not have been thinking, oh, Happy New Year, because they were so busy posting all kinds of things in that great big old ledger we've been talking about for year end, and spending all of January at least doing all of that and adding and re-adding the ledger pages and balancing the books. So hopefully over the years, accountants are somewhat able to say Happy New Year and mean it, especially if they have CHS. In this little blurb, I'd like to show you the tools that CHS has to help you close your books at year end after you've gotten everything posted for the year. I've reopened the screen that we've been looking at that shows journal entry batches, because when we do a closing year end, even though you use the screen that CHS has to help you with that, it will create an adjusting journal entry as if you had done it yourself. And I know how to look for the ones that I've done in the past. I'm going to type CLS in here, do search for partial. And the reason is when CHS helps you with the closing journal entry, it does CLS space and whatever month you had as your fiscal year end closing and the year. So I can tell that we've done a closing journal entry for 2013, 14, and 15. So what I'd like to demo in this one is 2016. So if we go to the Home main menu and I expanded General Ledgers and Financials and did Financial Statements, I want to show you a few things there. Let's take a look at the balance sheet as of 12/31/2016 with GL numbers. And you're going to see, of course, the balance sheet here, receivables, work in progress, cost of sales recognized that we were doing in our percentage of completion seminar, fixed assets, accumulated depreciation, current liabilities, all the way down through owner equity. And then inside the equity section, we have something that says sum of profit and loss accounts. So all of the accounts on your chart of accounts that come after the equity section get summed up and are put here in this line so that we can have a balanced balance sheet. and show that liabilities and equity equal our assets. Just wanted to point that out, and that line there that has 36,027.65. Now let's close this part about balance sheets for a second and jump to income statements. So I have put in the beginning of the year to the end of the year, and if I do an income statement with GL numbers, now we have just the income statement accounts, all the sales, cost of sales, the gross profit on our sales, and our various admin and expense accounts. And here's depreciation rental property that we were doing for 2016. We saw that journal entry for that. And down to the net income and loss. And notice that the net income actually is 36,027.65, just like we saw on the balance sheet for the sum of all of these accounts in order to balance it. So all of these get summed up and put onto the balance sheet. Now what happens at year end when we make a journal entry is that all of these will actually get zeroed out and sent to either owner equity or retained earnings. Let's go back to home, and over here under AJE's POC closed jobs or books, there's one for closed books year end that I'll click, and I've typed in 12/31/2016. You should start in, it's telling you, looking at the previous year to make sure there's no leftover balances or something you entered that's now showing up in the year that you thought you closed. And by the way, when you select the equity account that you're going to close into when we create the journal entry, you might be doing retained earnings if it's a corporation or some other equity account that your accountant tells you. We're doing owner equity because this is a sole proprietor company. But let's take a look at 2015. If something shows up here, it says no records in report, that's good. That means that we closed out 2015. Let's see what happens when I do 2016. Review the accounts that will be closed, and you can see that all these accounts, based on just our little demo stuff, have things. What it is suggesting over here is that before you close the year, you do this button, and you can also get it on financials over here under balance sheets. It's the same thing. Trial balance with job sums. Let's go back to the closed books at year of end and see how you can open it from here. And it is suggesting in all of the help tutorials that you open this before you close. One of the main things that you're looking for is that in your work in progress account, that on the NHB thing is called direct construction costs, but it's a work in progress account. You're looking for jobs that suddenly might show up in red that they've been closed and they really shouldn't be in work in progress anymore. And you would want to drill down to see what that was about, so that you could either close the job again, run a little job closing journal entry to get a closed one out of here before you close your whole entire books. So that's just a little picture of taking a look at that and studying it and saying, am I ready to close all of the books? So what I'd like you to notice is that I can do one click of a button, post the journal entry batch. I'm happy with it. It's saying, is it okay to post? It can be reviewed or deleted by using the adjusting journal entries button under accounting. So let's just post it. It is that quick. It has been posted, and it's going to let you review the entire journal entry that has just gotten posted, and you'll be able to see, if you notice the column here for job, that sales single family homes, we took out this much for Vista View. Rental income we were clearing. All of these are having the opposite, like in cost of sales for Vista View. A credit was put there to clear out the debit balance and set it to 0 in cost of sales as of the end of the year. And all of this is coming down and ending up in owner equity. There's a few lines for owner equity because anything that we found for jobs, we summed up and we're putting in by the job. Because in the future, if we want to have an income statement or a balance sheet or a trial balance for that job, it'll be balanced. So we take everything by job and by department over to owner equity so that we can keep our books going where we can ask for things by job and department. So that's how easy it was to do the closing journal entry. And if we jump back to financials and we do our balance sheet as of that date, balance sheet, you'll see that down here, everything is in owner equity now to balance the things, and there's not a line for the sum of income statement accounts here because 2016, all of those balances are now 0. You can see that if you go to a trial balance as of this date, you're going to see all these with balances, 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 all the way down to equity, and that's it, and it totals to 0 because everything after equity has been closed into this owner equity account. You can see that there, and then you can still do an income statement for this period without the CHS closing entries, and you can do it and still see it, because it will ignore the closing entries, and that's why you should use the screen that CHS provides for closing the books at year end, because that's the only way it knows which entries to ignore. It knows which ones are part of that big journal entry batch and ignores those. Now, if you need to include the closing entries, you'll see that all of your accounts are zero because we've included the closing journal entries in this particular income statement, so it looks like we made zero. Income statements that include closing entries should not be used as financial statements. They are available only to spot accounts that have not been closed. So it's that easy. If you go to journal entries now and refresh the screen, let's search again actually. And we're going to see 12/2016 showed up, that we can delete it. Again, it's not rocket science. It just prepared a great big journal entry. If you decide, oh, I did that too soon at year end, you can delete the whole thing and then go recreate it. So I hope that shows you how easy it is to do your year-end closing in CHS. But first of all, before you do that, always make sure you've got all your things in, like that depreciation entry we were entering for year-end that your accountant might tell you need to have, and any other adjusting journal entries you need to make before you do the closing. And again, study that trial balance that's so great by job. So really quickly, we are going to take a look at the other financial statements that are available in CHS that we have not really covered in any of our seminars. And I grabbed some clip art about financial statements. And yes, CHS does, as you've seen, balance sheets, income statements, which are profit and loss statements, and it does cash flow statements, which we haven't looked at as much other than how CHS does such a good job of tracking cash by job. So let's jump back over to CHS to go over just a few of those other financial statements really quickly. On the CHS main menu, let's click Financial Statements again. So like I've been saying, CHS is a full and a powerful accounting program that is also custom designed for home builders because it has the additional ability to track so much by job or department division and to produce financial statements for the whole company or for each job and for each department. So let's take a quick look again at the financial statements. First of all, notice that there's info here about how CHS gathers job costs and how to reconcile those subsidiary job cost reports to your accounting balances, and how each month you should check for and clear out jobs that should no longer be in work in progress. Let's first of all jump to where the balance sheets are, and let's get our date we were just using. And we saw the balance sheet with GL numbers just real quickly. Just wanted to show you that again. Here's the balance sheet, and it has all of these individual GL accounts underneath these groups. I wanted to show you real quickly that there is a summary that just shows the total for each group. And so it's a short type of balance sheet that's different. You can pause if you need to look at that. We've already looked at trial balances, and I've already shown you the powerful trial balance that shows you the balances for each job in each GL account and how you can drill down on those balances and review the records behind those balances related to that job. This is a very powerful tool to use at the end of each month to look for jobs that should no longer be in work in progress or direct construction costs in this case. This is to spot ones that maybe have entries that were posted after a job closing entry was done. If you spot one, you can go create another job closing journal entry to get the balances moved out of work in progress and onto your income statement instead. I can tell you that CPAs just love this particular window. You can track things by department. For example, if I put in the department PM for property management, we can do a trial balance for that little department, see where it stands right now, just for that department. We can see a cash flow for the department, and we can see right here where we were putting out cash to actually buy those rental properties. So far it hasn't contributed cash, net cash to us, but it shows you the balance of the cash flow in the department, and you can drill down to the detail behind those and see the individual records for those. You can do an overall cash flow report for the company, and if you're an accountant and you're familiar with cash flow reports, it starts with sources of cash, uses of cash. I will not do an accounting class on how you read this exactly, but you can see the cash balance for the whole company. It says it's $439,068.47 on this date. Let's look at a balance sheet $439,068.47 ties right in here to what the total of our cash accounts are. If you do a job like the job we've been working on in our things, let's just use today's date now since we were working on it in 2021. Just do today's date. You can see a little cash flow for the job, sources and uses, and comes down to net cash contributed or used by job. And if you analyze the cash for that job, which we've gone over some of this before, but see that same number there, job net total, it is broken down by cash account or credit card account and money spent, and you can drill down on, say, the deposits that were deposited here, the payables that came out of this account, payables paid by a credit card, etc., and see how CHS is coming up with that net cash balance. That is another really powerful tool in CHS, is analyzing cash by job. You can do a great big one over here for all the jobs. Click this to analyze the data. That's about the same thing as that one is. Another thing you can do is, we went over income statements, etc., but you can do a comparison financial statement. So let's just compare 2015 to 2016 and see what we get. So you can see period 1, which is the year 2015, and period 2, which is the year 2016 for sales, rental income, etc., the difference, and your various expenses, and the difference between those. As I said, this is a demo company that really doesn't have the kind of activity you would expect, but you get the concept of being able to compare that. You can also compare the balance sheet numbers and see how things have changed. If you're doing that, you might go, we had this much as of 2015, this much here, and the difference is this much. So we've made more money somewhere. We have more cash on hand at the end of the year, and various things like that on the balance sheet, just to let you know that that's there. One other thing that we can do, if I go to trial balances, is I could do a period trial balance. And I think I'm just going to do September 2016. And I'm just going to do our work in progress type of accounts, which would be direct construction costs. And I want to include all the way through our liability accounts that we have going on, that is money received that are still on the balance sheet. So let's do our trial balance for the period. And you can see work in progress here, balance forward 831, then the changes, then the ending balance here. So you can see how much work in progress or direct construction costs changed. So you can see how much work in progress increased, how much cost of sales you recognized and sent over to cost of sales, which you did none in September, which if you're in the process of doing percentage of completion, this is the way to check to see if you've done any of those. Property, plant, and equipment hasn't changed, etc. This is because, again, we have a demo company, but you can see that you can look at period trial balances and various other reports that we have here. You can do a 1-month ledger with the detail, and you can do ledgers that sum up everything by month under each GL account, a ledger that sums up everything by job and month, and a ledger that sums up everything by quarter. So there are various kinds of reports of all kinds, financial reports that can help you review things. And one more thing I'll show you real quickly. If we go home, you're going to notice something called Financial Budget Setup, which is a setup for your various income statement accounts. You can see that we've done budget worksheets for 2013, 2016. So let's just take a look at that one for just a second. I'm not going to go into all of this. I'll tell you that you can decide to budget how much you're going to have in sales, and you can see that I've just been piddling with all of it. Cost of sales, but you can go across 12. If you add a new budget line, you can put in an amount and then click this to fill in all 12 months with that to get your budget set up for financial stuff. And then when you're ready, you can do for a certain year. 2016 was what I clicked, and see the budget versus the actual and the difference. And you'll see all of that down here, and whether you made less or more than you were budgeting that you thought you might do. You can do for 1 month, like who knows if I have something in January, and just check that out and see how you're doing just for January. Month budget, month actual, month different, year to date, and actual for January. Also, when you're doing the budgeting, you're going to be telling it which department, so that you can also do financial budget comparison for departments. There are some tools here and good help about it, about how to analyze your prior costs that you've been having for your financial statement, your income statement, and various ledgers that will really help you decide what to budget for based on the past in your next year that you're budgeting. I just wanted you to know that that's here. I'm not going to go into great detail because this video has already taken too long. I'm hoping that I've given you a good idea of how much stuff there is in CHS, and again, what a powerful, powerful tool for accounting CHS is.